Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about M&T Bank CORP quarterly report. M&T Bank Corporation offers a wide range of financial products and services to individuals, businesses, and institutions. The company's business segments include commercial banking, commercial lending, leasing, letters of credit and cash management services, retail banking, deposit products, automobile and recreational finance loans, home equity loans and lines of credit, credit cards and residential mortgage and real estate loans, institutional services and wealth management, plus trustee and agency services, plus investment management and security brokerage services, plus personal trust, planning and advisory services, plus asset management and family office services, plus investment products such as mutual funds and annuities. The company provides its services through various channels, including branch network, telephone banking, internet banking, and automated teller machines. The M&T Bank Corp stock price has remained relatively unchanged in the past year, experiencing a decline of 4.77% to 7.22%. This stability can be attributed to a combination of routine corporate activities and a lack of significant news events. Key factors contributing to this performance include consistent earnings announcements, regular dividend declarations, participation in investor conferences, adjustments to prime lending rates, community development initiatives, management updates, and share repurchase programs. While these activities are typical for a large corporation like M&T Bank, their cumulative effect has been to maintain a stable stock price. The absence of major positive or negative news events, such as significant acquisitions or regulatory fines, has also contributed to the stock's relatively flat performance. Overall, the bank's steady operations and lack of dramatic events have resulted in a modest decline in its stock price over the past year. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by the increase in net interest income after provision for credit losses, plus 3.6%, total other income, plus 15.7%, mortgage banking revenues, plus 23.6%, and service charges on deposit accounts, plus 7.3%. Additionally, institutional services and commercial bank revenue increased due to higher service charges, trust income, and merchant discount fees, while wealth management revenue grew due to higher trust income, brokerage services income, and other revenues from operations. On the other hand, revenue decline is primarily driven by a decrease in net gain on sales of assets, minus $79 million to minus $3 million, net change in loans originated for sale, minus $544 million to minus $3 million, loan servicing revenues, minus 8%, and provision for credit losses, plus $12 million due to higher net charge-offs. Net income and profit margins. A shift in favor. The financial summary reveals a significant improvement in net income and profit margins for the company. Net income increased by $71 million, 9.8%, for the 3 months ended September 30, 2025 compared to the same period in 2024, and by $185 million, 9.7%, for the 9 months ended September 30, 2025. This represents a substantial turnaround from a net loss of minus $459 million to a net income of $277 million. The operating profit margin also saw an increase, rising from 11.9% to 12.7%. However, the net interest income margin decreased by 4 basis points for the 3 months ended September 30, 2025 compared to June 30, 2025, and by 23 basis points for the 9 months ended September 30, 2025 compared to September 30, 2024. The reasons behind this shift are attributed to a decrease in provision for credit losses and an increase in interest received during the period. Additionally, improved investment securities performance, effective management of cash flow hedges, and favorable other comprehensive income loss components contributed to the net income increase. These factors have collectively led to a significant improvement in the company's financial performance. The company's financial performance indicates a strong ability to generate cash from its core operations. According to the provided information, the company has consistently produced positive operating cash flows over the past 2 years. This trend suggests that the business is financially stable and capable of meeting its obligations without relying on external financing. The generation of positive operating cash flow is a key indicator of a company's financial health, as it demonstrates the ability to cover expenses and invest in growth initiatives. The company's financial situation has undergone significant changes in terms of its debt level and interest expenses. The total debt has increased from $12,605 million to $14,987 million, with a notable surge in short-term borrowings by 95%. However, the interest expenses have decreased by 16.1%, primarily due to lower interest rates on fixed-rate long-term borrowings. This mixed trend suggests that while the company's debt level has risen, its interest burden has actually decreased. The financial performance of the company's various segments has been mixed. Notably, commercial bank and retail bank have struggled, with a decline in net incomes in 2025 compared to the previous year. In contrast, institutional services and wealth management have shown significant improvement, increasing their net income by $35 million from 2024 to 2025. Management's outlook on company strategy. The company is focused on making required disclosures for the year ended December 31, 2025. Additionally, it has invested in partnerships to support community reinvestment initiatives and implemented strategies to reduce commercial real estate loan concentration while retaining originated residential mortgage loans. However, management remains cautious about external factors that may impact performance, including economic conditions, interest rates, and regulatory changes. The company has made several strategic acquisitions and divestitures over the years, impacting its financial performance. Acquisitions include assuming deferred compensation plans and non-qualified supplemental retirement benefits from various acquisitions. The company also acquired financial institutions, resulting in goodwill and intangible assets. These moves aim to expand the company's presence and capabilities. On the other hand, the company has divested several businesses to focus on core operations. Notable divestitures include the sale of CIT Business for $28 million, Wilmington Trust SB Services Inc. for a gain of $10 million, and a subsidiary specializing in institutional services. Additionally, the company distributed an earnout payment related to the CIT Business sale and sold out-of-footprint residential builder and developer loans worth $661 million. These divestitures aim to streamline operations and reduce non-core assets. The company has a history of paying out dividends to its shareholders. In fact, as recently as the quarter ending September 30, 2025, it declared and paid out a significant amount of $234 million in cash dividends. This demonstrates the company's commitment to returning value to its investors through dividend payments. That concludes the financial summary for M&T Bank CORP. Feel free to comment below, and I will be happy to answer them when possible.